Hello everyone and welcome to ICM's midday session. So we're going to talk about what happened during the European session and focus on some price action on the charts. So first, what happened today? We had the IFO business indications from Germany, and they signaled that there could be some headwinds to the German economy, especially following the resurgence of COVID-19. So it's impacting the market. We've seen we saw the euro dollar dropping a little to almost 118 mark, and now we're trading back above towards 118.25. So we're gonna have a quick look on the charts. So this is mainly for the calendar for today. We still have some data from the United States in a couple of hours, but mainly in the economic calendar, that's it for the day. And definitely all the headlines regarding stimulus and Brexit, for example, they're gonna weigh on the market. So let's start with the euro dollar, which is having almost a sideways move since the beginning of October. So we have to highlight certain levels. So there's a bit of a trend line that we've been working on. So if you just combine the previous two bottoms, you have the bottom that was reached today and the market bounced from it, and also you can just draw another trend line for the previous two tops. So we're trading inside a certain consolidation following this move. So the market moved higher. We had a bit of a correction, then another leg higher. Correction for this one, and then we're trading inside a certain move, awaiting some fresh drivers for the price to come out. So for traders, you have to watch out for a bullish scenario. We have definitely to clear above the previous level of 1865 and get closer towards 119, 118.80. So this clearance above this resistance area could be positive for a bullish or more bullish scenario. While on the other hand, if the market drops back below 118 or 117.85, this could lead to further deterioration or drop towards the previous zone of 1760. So these are the key levels if you are trading the euro against the United States dollar. I'm going to add some indicators. So also you can see here that the 200-hour exponential moving average is acting as key support 1 and 2 times, and we're bouncing off it. So watch out for any break below the 200-hour exponential moving average, which is also coinciding with the trend line that we drew. Also, the RSI dipped towards 30, but bounced a little bit higher. So watch how the RSI will move from here. If we stay below 50, this is gonna be more hinting towards a bearish scenario. Moving to the British pound, which is having a bit of a pullback now. So we had this move on optimism over a deal, and then the market corrected and lost mostly all of the gains. So if we remove these indicators, you can see that the market had a certain correction, certain drop. But also, if you just draw these the trend line combining the previous two bottoms, you can see that the market bounced exactly off this bottom. So as a trader, you have to highlight also these levels here, which is also showing that the market moved in a certain channel by combining the previous tops and bottoms for the move here. So as a trader, you have to put much concern for a drop below 29.90 again, which would make bears more in control and drive the prices maybe lower towards 129.07 or 129 mark. And on the for a more bullish scenario, we need to at least retest the previous. Definitely, we need to break above the trend line, combining the previous top, but also rise above 130, 120 to have a bit more of confirmation, and maybe retest to 130, 180 again. So if we just add the indicators to see what we're having, you can see here that the price was trading inside from the bottom side of the band to the upper side. We're finding some support near the 100 and 200-hour exponential moving average. And the RSI, we had a bit of a divergence here. So the price was having lower lows. If you can see the price here, low, another low, and the lower low, where the RSI here was almost holding near the 30-31 level. So this is a type of divergence. So watch out how this will come and play. Moving to the dollar against the Japanese yen, so we're having also sideways move following the sharp drop on the 21st of October, and now we're trading sideways, awaiting some drivers. So also you have similar formation of a channel or a flag, inverted flag. So watch out how this will come in play, especially as the 100-hour exponential moving average is also providing resistance for the past couple of hours. So you can see here the momentum is a bit less today, but the market is finding resistance also near the 100-hour exponential moving average. So watch out for any serious break above the moving average, which is also coinciding with the level 140, 190, the previous resistance zone. So any break above it could lead to an appreciation in the pair to at least 105.20, 105.30 area. While on the negative scenario, any move lower and drop towards the bottom side of the channel could trigger further downside towards 104.50 level, 104.40 level, and lastly 104.33, the previous bottom. So this is for the dollar against the Japanese yen. The dollar against the Swiss franc also, it's very clear that the 100-hour exponential moving average is providing key resistance. So we had the first reversal from the 100-hour exponential moving average, and now again we're having another reversal. So watch out how this will come in play. The pair failed to have a lower low relative to the previous low set on the 21st of October. So this is a key point. You have to just draw the line to set a key level here near the 90.35 zone. While also here, if you just draw a trend line from the previous top here, you can see that the market is finding resistance near also this trend line. So we're trading inside a certain consolidation, which is not mature yet, and definitely along with some drivers, it could lead to a certain moves. A bullish scenario could lead the pair higher towards 91.20, while a bear scenario could lead to a retest of the previous resistance zone near the 90, previous support zone near the 90 psychological level 89. So these are the key levels that we could trade or we could target when we break out of this consolidation zone here. Moving to the Australian dollar, which is being a bit strong on the day. So you can see here on the bigger chart, we're still trading near the trend line. Where we're having a bit of a consolidation here, so waiting some drivers. If we just have a closer look on the smaller time frames, you can see this sideways move that we're facing. So the market moved lower, and then we had a bigger correction, and now we're trading sideways, awaiting some more clarity on the fundamental side on what could happen. So we have the consumer price index throughout the week. It could weigh on some expectations for further easing, maybe from the RBA. So this could be a price mover. So you have to pinpoint the range trading that we are trading in, which is almost the 70 pips range between 70.85 and 71.60. Any break below the 70.85 will lead to a retest towards 70.20 and raise the chances of further drops towards the 70 area, while any bullish scenario or positive push higher could lead to another move to break above the trend line, the downtrend line that have been drawn. And also maybe we could be retesting this at the same point here near 71.80, and further bullishness could drive the pair higher towards 72.25. Moving to the New Zealand dollar, almost similar formation, but still it's a bit more strong than the Australian dollar due to higher chances of easing from the RBA, while the RBNZ is expected to remain on hold. But still, on the bigger picture, we're still trading inside almost this range of trading here. So it's nothing directional on the pair. Following this sharp move, if we go to the H4, we can see we're still in the same pattern for almost 3 months now. So we need to break out of this zone to have further drop. So if we just have a closer look on the bigger chart, you can see a support near 65.50, which is almost 180 pips, 130 pips away. So this is for a bigger generic direction. If we just go closer to what we're seeing on the day, you can just draw a trend line here with these stops. You can see it with these bottoms. So you can see here how the price rebounded from the trend line, and we're trading near the previous resistance area. So if we just need to highlight on what's happening on the day, you have to draw this trend line, and then also you can point the previous stop and wait for any break from each side. So either we have a break to the downside from the trend line and we target previous support of 66.30, or we just go to a higher high where you can use the Fibonacci for additional. You can use the Fibonacci for additional extension for certain targets. So you can go for 123.6, which could be at 0.6740. This is for the New Zealand dollar. I'll add so you can see here how the market is moving sideways, and the Bollinger Bands, they are just signaling this with bands closing in, awaiting some certain breakout from this consolidation formation that we're trading slow. We're trading almost sideways up. So any break above this formation would be significant and lead to a certain clear directional move. Also, where this trend line on the RSI, where any break above it could be more bullish for the pair. The USDCAD, the US dollar against the Canadian dollar. So also, if you just have a closer look on what's happening on the day, we're having a move higher, and then we had a bit of a correction during the past hour, and now we're bouncing again higher. So we're seeing a little bit of a bullishness towards the pair. So definitely you need to keep in mind the 32.05 and the previous resistance of 32.60, which is a key level on the bigger picture. So these are the key levels for the Canadian dollar. And also any break below the trend line that's being formed here on the smaller time frame. So if we just go for the 15 minutes chart, you can see how this trend line, rising trend line, is being is getting more valid as long as we're retesting it and then bouncing from this trend line. So any break below this trend line could lead to a drop towards 31.20 or to the pair erasing all these gains. So these are the key levels. This is the area that we're trading in. And this is trend line that's valid for the time being. I'm just gonna add the indicators again. So we're trading almost near the upper side of the Bollinger Band, and the drawbacks towards the bottom side are being bought. But any break below this, the lower band or the middle band even of the Bollinger Band, could lead to further bearishness, and the pair could retest the 100 and the 115 minutes exponential moving average and 215 minutes exponential moving average. I'm gonna move to gold, which is having a bit of a upside move during the past couple of hours, but still on the bigger picture. Just go for the hourly chart. You can see that we're still trading inside a certain consolidation. So you can just draw the trend line from the previous stops that we're currently trading at. So we have this trend line. It's a bit valid since it's coinciding with the 100 and 200 hour exponential moving average too. So any break above this trend line could be a bit more significant for another move higher towards 1914, and any break or reversal from the trend line could lead to a move towards 1890 and maybe further towards the previous bottoms near 1878. So this is on the gold. While moving to silver, almost same formation, but still silver is more bearish. It's in a more bearish trading, so we're seeing further lows while gold was able to retrace some of the lows. So we're almost having channel formation down. It's not a bit of a channel, but maybe posting like lower lows and lower highs, signaling to a move to the downside. So you have to watch out for any drop below 2360, which could lead to further drops below 23 or trigger more bearishness to the bullion. And also any break above 24.95 should be supportive, and we could witness further highs not reached since mid-September. So this is for silver. The Bitcoin, following news from PayPal, it surged towards 13,000. After that, we're trading sideways for a while now. So you just have to, you can draw the trend line here, or the formation that we've been trading for a while. So it's clear that the factor that gave this push is a bit fading, and we're trading sideways, awaiting some fresh drivers for Bitcoin. Any break back below 12,600 could trigger further downside. Maybe we could erase a big part of the gains and retest towards the 200 hour exponential moving average, which is currently sitting near 12,000. Dow Jones on the bigger picture. Just go for the hourly chart here and just move back. Following this move higher, we're now trading inside a certain channel, and we were able to retest the bottom of the channel earlier today and bounce back higher. However, we're still facing some pressure since the hopes of reaching a fiscal stimulus deal before the US elections are fading. So these are weighing on the market. So any break maybe below the bottom of the channel could lead to a retest of 27,524. While if the channel holds, we could be retesting 28,395. So this is the formation on the Dow Jones. You can trade this formation. If we go for the hourly chart, we're adding indicators. So you can see here we're having directional moves inside this consolidation. So straight on the smaller time frames, it's directional move down, another straight move up, straight move down. a bit of consolidation, now straight move ups and straight move down. So we're even having towards a smaller directional trades within the bigger consolidation. So mainly this is it for, I'm just gonna move to oil. So talking about Brent, which is having a bit of a drop earlier today. I'm just gonna remove the indicators again so it's much clearer. So you can see here we had a certain consolidation area for a while that we've been trading in between 41.44 and 43.45, and today we were able to break below it with a key down. So any further deterioration over the outlook of demand could lead to further losses in Brent and drive prices towards $39. While more bullishness over, for example, fiscal stimulus or stimulus packages around the world, or any signs of improvement in activity or economic activity, or a delay in any restrictions from governments could lead to further bullishness or further positivity on the trading, and maybe we could be retesting 41.45 again and trading back above it. So this is all for today's session. Thank you all and have safe trading.